In this video, I want to break down a trade that I took on the S&P 500. It was a little over $4,600 profit, and I want to show you all what I saw, how I saw it, where I entered, where I exited, and my thought process backing this setup. Before we get into this, I recommend everybody watching this, if you have not already followed me on my Instagram, I will post a link in the description below to do so. I post daily trading recaps along with really good trading tips and tricks that I guarantee you're not going to find anywhere else. Again, the link is in the description below. You're seriously missing out if you're not following that resource. But now let's get right into this video. So as I mentioned, it was a little over $4,600 profit, and I traded this setup a little differently than how I normally have been trading for a couple reasons. Now, this is on the S&P 500. You all know that is my favorite instrument, although NASDAQ has been having a little better opportunities than the S&P. But I want to show you what I saw on this, and let's first go over the pre-market plan. I post these every single day in the Discord of setups I'm watching, levels I'm looking out for, and potential trading scenarios. So today, on July 13th, we're watching that as long as we are above 4498 on the S&P, that I want to continue playing dips or pullbacks and being a buyer or a bull. Now, we didn't have any close levels of demand. We didn't really have any serious levels of interest. And that's why being aware of the tape and understanding what's happening behind the scenes via order flow is very important if you are a short-term trader, and I'm going to break that down. However, in the intraday commentary tab, this is where I update my thoughts throughout the day in real time. I liked how the S&P 500 was holding above a previous supply zone. It was retesting it, and it was being defended from buyers at 4529. We're holding above it. I don't have any levels of supply until 4550, and it's best playing these retests or pullbacks. And a few minutes later, I got long at 4528. And what's very important here is I was giving this trade room to breathe, and I was not having a scalping mentality. If it works, it will take time, especially that the nearest level of interest that I had was 30 points higher at 45.50. Now, what this looks like on a chart is the market rallies higher, we pull back into this 4528 level, and it gets held very well, and this is when I entered the trade long. I'm going to show you exactly what made me click the buy button with this live recording of the order flow, but first we have to talk about how I've been trading recently. It hasn't been bad, but it hasn't been the best. And the past 3 days this week, Monday, Tuesday, Wednesday, I've been having really good setups, but my execution has been flawed and it has been lacking severely despite my analysis being correct. So for example, yesterday on the 12th of July, I took the market short at 45.20. We were counter trend scalp shorting. We saw buying drying up at the high. Literally at the high a day, I took the market short, yet I did not make money on this setup. So I saw buying drying up, we were inside of supply, and I said I am in a counter trend short at 45.20. Now the problem with this setup was I did not give it enough room to breathe. How I've been trading the past 2, 3, 4 months was my scalps have been pretty much working out directly after I enter, and there's not much room for error because I usually time my entries correct, and that's how I know other people are going to sell after I sell and the market's going to move in my favor. It's just how I trade and how I execute. However, for this setup on Wednesday the 12th, I got in short, and the market was choppy for like 30 minutes after, and I was getting sick of sitting in this trade, and I did not give it enough room to breathe. I didn't follow my plan, and I even said I got full out at 45.21 for a 1-point loss. Not a big loss at all. It's only $1.50 per contract, but the point is I had a really, really good setup, being able to spot the high a day from that setup, and I wasn't able to capitalize on that sell-off because we hit my target, and it would have paid really nicely if I just followed along my plan and executed properly. And then this is another example. On the 11th of July, which was Tuesday, I played the S&P 500 long at 44.49. I got filled long. We were buying essentially this dip, this pullback, and I did not give this trade enough room to breathe. I stopped out, and eventually my 4460 target did trigger a few hours later. But the point here is I am expecting the market to move in my favor directly after I enter. Now, some people might agree with that, some might not, but that's what has been working for me the past 1, 2, 3, 4 months. Now, this is why it's important to adapt and change to the current market conditions. If you trade the same way that you do, now the foundation is going to be the same or similar, but you must tweak or adjust to the current market conditions. It's like you walking outside in the summertime with a winter coat on. You're going to start sweating like crazy. You're out of your mind to do that. It's the same thing in the market. When the seasons change, you got to adapt and adjust accordingly. So because majority of my scalps work out right away in my favor, I'm adjusting now and adapting to the current market conditions. Now, what are the current market conditions? It's safe to say, and it's very obvious and apparent, that the volatility is non-existent in the market. It's when it comes, it does not last long. We can look at a VIX chart, which is the volatility index, and it's at a yearly low. I'm pretty sure it's even at a 3-year low. So VIX is what I call dead. It's non-existent, and volatility is very, very short-lived in the market. And this validates our point that dips are getting bought up. So because of this, I must adjust. And this is what I did today on Thursday, and it paid well. This is why it's vital for you to journal and track and review your trades, because if I didn't take those 2 trades earlier in the week, I probably would have took a loser trade on Thursday when I profited this $4,600. But because I'm aware of this and I'm accepting to change, I was able to capitalize and it paid pretty nicely. So when this level acted as support on Thursday at 4,529, I got long off of 4,528. Now what the chart looks like is we're going to rally up, we're going to consolidate above this old supply zone, and I want to replay the tape. Now the one thing I want you to note here is all the at aggressive offer trades or above the offer trades. What that tells me is they are very large market aggressive buying, which is wiping liquidity away from the passive sellers. So I'm going to replay this and watch every single time we make a new high, all the buying comes in. Break the high, strong buying comes in. We break a high again, strong buying comes in. We can see this by this 4 or 5 minute little rally up here above the highs. Then we consolidate and pull back lower. Now where this pullback gets bought up at is right around 4,527, 4,528. We're going to see an area of low volume from this rally up. The pullback there gets bought up. And this is when I said, okay, this level is holding. Buyers are defending it. Now all we need to see is aggressive buyers step in, and the chances of continuation are much higher, especially with a lot of traders trying to short this rally, where the past few days that's unsuccessful. And shorts technically are buyers, because if you think about it, for you to exit or cover your position, you have to buy. So those shorts who are getting in early technically are fueling a further rally higher, and that's just validating our point. So we can see this is holding, buying is strong, the VIX is dropping, which is validating our thesis even more. And what I really liked here was as the market consolidated, this trade took forever. And this is why in the Discord, I was telling everybody that I'm giving this trade room to breathe. It's not going to work out right away, and it's going to take time. And I learned that from my past few trades. But because of this, we saw 3 hours of consolidation near the high. Now, if we were to look at the delta, what we're going to see here is as the market rallied and formed a high here, we got that pullback. The market technically broke the high a day here around 11 o'clock Eastern, yet the delta was nowhere near the previous high. What that tells me is buyers are not aggressively buying as the market moves higher. So pullbacks are imminent, and as long as the pullbacks get bought up, that should support a thesis that buyers are buying the dip for continuation to the upside, and passive sellers are going to get run over, causing a further rally higher. So it's important to keep an eye on that, because this also added an opportunity where I added to my position. I never add, I never scale in, I'll scale out. I never scale in. However, today I did so when the market pulled back and we were holding VWAP, and the buyers or the bids were defending those drops. And that's why I kept reminding everybody, and this is why context is so important, because as long as we're above 4498, dips are going to get bought up, no reason to get bearish, and early bears, early shorts are just fueling a move higher. We were stuck in the range for a while. Rallies were getting sold, dips were getting bought into VWAP, and this is when I became confident that the ad was going to work out and the chances of us rallying are high. Now my risk is super small because we were holding VWAP, we formed intraday structure, and then we got the market rallying higher. As the market rallied higher, which validates now we're putting in higher highs, we are putting in higher lows, and those dips continuously got bought up. And I got out 90% of my position at 4540. I had a small position remaining in case we wanted to continue to close strong. And then I got all out at 4548 for about 20 handles of the S&P 500. Sold pretty much near the high a day. It was the longest trade that I took in a while. And remember one thing. This week, I've been taking paper cuts of 1-point losses, 2-point losses, 3-point wins, right? But all it takes is one trade like this where you gain, let's just say 20 points to cancel out and put money in your pocket for all previous losses. You want to set yourself up and position yourself that your winning trades will take care of your losing trades. If you have one winning trade and it's not wiping away the losses from 2 trades that you took, you're not positioning yourself to win, and you're positioning yourself to work really hard for an outcome that's going to be difficult to obtain. Remember, the wins must take care of themselves, and that's why risk management is probably the most important aspect to trading, because you got to position yourself to win. And I see a lot of traders not putting themselves in their position to win, and their losses are destroying their accounts. Even if you have 4 or 5 losses in a row, that's irrelevant. Who cares? I was red all 3 days to start this week, but this one trade outweighed all those losses and put money in my pocket. This is a perfect example of winning trades, taking care of the losers, and not getting frustrated because you lost. I entered this setup today the same exact way I enter all my setups, but the past 2 or 3 ones didn't work out. My risk was small, yeah, and it sucks losing, but I know that one win is going to cash out and nix all those losses. So I'm going to leave you all off on that note. I hope you gained any value out of this, and if you enjoyed this video, I'd appreciate a thumbs up, comment if you have any questions, and definitely hit that subscribe button and check out the links in the description below. But I'm ending it. Peace.